Taking a look at the trading week beginning September 1st, which in the US and Canada really begins Tuesday, September 2nd because of the Labor Day holiday in both of those countries. The performance of tech stocks next week is critical as they're likely to dictate broader market trends for the near future. Nvidia's recent 3-week decline, despite nearing all-time highs last week, missed it by 2 cents, signals some caution. With earnings season largely over, attention can now shift to macroeconomic factors. A tech stock rebound next week could push the entire stock market higher, but continued weakness might trigger a deeper, prolonged correction in equities. Front-end yields dropping for a second week suggests continued potential for the September rate cuts, with key U.S. employment data looming next week. This coming trading week is actually packed with economic data on employment, featuring the JOLTS jobs openings report, another week of jobless claims data, ADP private payrolls, and of course, the monthly non-farm payrolls data from the BLS. All recent Fed speeches are concerned more with the unemployment picture than with inflation. So markets like gold, copper, the dollar, and equities largely hinge on next week's employment figures. Looking ahead at earnings next week, we have a grand total of 38 companies reporting with market caps over $1 billion, including some notable ones like Broadcom, Salesforce, Zscaler, Neo, GitLab, Hewlett-Packard, DocuSign, Dollar Tree, Toro, Campbell's, and Lululemon. We also have some central bank speakers next week, including Christine Lagarde from the ECB, Minneapolis Fed President Neel Kashkari, and New York Fed President John Williams, among others, who have yet to be announced. Data, Sunday night, we get China's Caixin Manufacturing PMI. Monday, markets are closed in the US and Canada, as I said, but we do get German and Eurozone manufacturing PMI and Eurozone employment data. Tuesday, EU CPI, US manufacturing PMI, and Australian GDP that night. Wednesday, US factory orders, JOLTS job openings data, and the Beige Book from the Fed. Thursday, jobless claims, ADP employment change, and unit labor costs in the US. And then Friday, UK retail sales, German factory orders, Eurozone GDP, Canadian employment data, and the monthly payrolls data from the BLS in the US. Estimates right now are for in the mid-70s in terms of jobs added.